TradeTheMBI.com. This is Jones Report is for the 17th of July. The end of the week pushed out to new highs, but still finished on the bottom side of it. It's all still pretty clean from a daily standpoint, though we do have some positive extremes from right back here that will have to get filled under the lows of this bar right here, which is right around the 44.70 range, and still looking good from there. A little bit of weakness coming from the fact that on the DSC you can see short-term buyers fading off just a bit off the exuberant run, and that's not uncommon. A nice 3-day push there. This would be day 5 coming into it. Wouldn't be surprised to see it fill back in and then pop up if they think that enough shorts have activated into it that they can trap them. Is interesting, actually. I should go back to that one real quick because it's worth noting here as we look at the shakeout. We're right at the precipice of matching the previous histogram highs, so that becomes critical that continuation go forward, because a breakdown at this particular stage from it would definitely suggest that we're going to be moving below support at that particular stage. So I think that's worth noting. Just from a practical aspect. From the NQ, everything's looking pretty much identical to what the S&P is, pretty straightforward. So I think that all this action's been fairly clean. Interestingly enough, from the Treasuries bond market, continuing to be on the wrong side of things for quite some time. I think this has still been a difficult period for a lot of bond traders, having been in that bliss period of being able to ignore what the Fed was doing because they always assumed that the Fed would have to ease, and some of them just haven't quite transitioned to where the Fed was taking this with raising interest rates, and that by pumping up the inflation, they sucked up all the liquidity, or at least a huge chunk of it, at least from the regular average person. And the idea being is to just bring things to ahead by taking the funds away without actually stopping work and or consumption. And then they've done a fairly good job so far. That doesn't mean they're not going to go too far, because we know they will. Fed always does. And but at this particular stage, the rise makes no sense because the Fed isn't going to change its mind anytime soon. And by lowering rates, you're just giving away money. But that's what people do. That's the whole point of trading, right? And from an oil standpoint, still at the upper end. We're just retesting back from the breakout here, but definitely getting them back in the range that's been in this period from May. Certainly helps stabilize. This kind of pop is the nightmare for the Fed, because that restarts the inflation that they began, but they want to keep now under a little bit more control, because as we talked about way back when the Feds first started, it was going to become problematic from a U.S. budgetary standpoint, because the cost to carry the debt would become so staggering that where it wasn't noticed before as much at zero rates, definitely going to be a problem budgetary wise going forward, or they're just going to produce massive deficit. But the problem with that is it just becomes so exponential that it becomes ridiculous. It blows up on itself, and that's what everybody knows will happen. It's just a question of when and how you can modify and what you can do to extend that before the ultimate happens. From a euro standpoint, ridiculousness continues here. Just an insane move. Some were saying it was tied to the agreements with the war situation and how things have stabilized, but no, it's literally the eurozone is still in a disaster state and not improving. But this certainly helps U.S. corporations in that from an earnings standpoint. Subsequently also gives some breathing room for banks in Europe, which are really under a lot of pressure. So having a pumped up euro gives much more room for it to move back into it if there's continued problems, and that's the way it works. It's not based on what's actually happening, but where things need to be. And because we haven't seen any action in gold, this gives you an indication of where inflation really is. It's been in a subdued mode for the last couple of months since we saw that fade in oil. And so you can see this looks almost identical to the oil, but now that oil's begun to come back up a little bit, gold hasn't moved yet. And that's an interesting one, because you would expect that if we get back towards the 80, I would think that you would see a quicker spike in gold to make up for the fact right now Still believed to be in a trading range from that and not really pushing any inflationary pressures. From Bitcoin, all that news from the XRP settlement, I didn't even really talk about it because it's just not relevant to anything. Yeah, you get the excitement, but you can see it's already faded all the way back off in that. It was really confused and convoluted, left no clarity whatsoever in anything. So it's just going to get pushed off until a later date, um, which is fine. That just leaves more room for the speculators to do what they're doing. As long as you understand this is a trading vehicle and that's what it's there for. There you have it. You can just do that. Same thing with ETH. Did exactly the same thing. There's super excitement on the news, and then people sold into the news once the spike took place, and did just fine with that. From our 50K standpoints, we had all these nice long runs, and then it flipped to the short side here. We've hit the 50% on that. MBI White still leading, but you do have Magenta back up and over, so it'll be really whether or not the DOC here with the orange stays caught between cyan and red would be a continuation. It's right on the edge of that at this particular stage, so to keep an eye on that. And the fact that we haven't dipped below the red line means that that 50% is likely to hold at this particular stage. So that sets up another pushback towards the upside on that. So we'll keep an eye on that from an intraday standpoint. We can see in post-market, not a whole lot of action. I mean, it's just been back and forth. We had a little bit of a spike to clear out some shorts. That faded off, and they just brought it back to neutral. But at the end of the day, the other day, it was beautiful because what they did was off the pump. And they just took everyone out towards the end of the day. And it's where you clear out the weekends and you start over and you begin the new week. And now that we're in the middle of the month, so we don't have any real new fund money or anything like that. So it's a little bit more of a labor to push things. So I think that'll probably more institutional guys be waiting for a pullback to jump into anything, so as not to be racing to catch highs unless there's a clear breakout of the highs. But the fact that we made a new high the other day and didn't push off of it indicates it could be a little fatigue right there as far as finding new money. So just throwing that one out there. As always, though, trade well. Have a good one and look for my Skype chat.